If we wanted to buy some shares in this, what do we do?
Well, very simply, as soon as the initial offering opens, and I'll just bring you back to another one.
Okay.
So this is our offering that's happening this Friday.
Ferrari 348 TS Serie Speciale.
That's right. So this is the most rare of the V8 Ferraris from the 1990s. They only made 100 of these. Really spectacular example. Award-winning
V8,
example.
all right, I thought they were V12s and everything.
Well, they always made, V8 Ferraris are always they made a series of that, in terms of the rear engine V8 Ferraris.
Got it. Okay.
Yes.
And so this is only 138,000.
That's right. And this is a deal, like, for example, as the community develops, we're able to move a deal like this in a matter of a few hours.
What's the minimum investment?
1 share, and in this car, that'll be 2,000 shares, so about
$500.
No.
Oh no, 2,000 shares.
2,000 shares,
not 200.
That's right.
2,000.
So $60-$70. Yeah.
Oh wow.
Yeah.
So this is like micro investing, nano investing.
And we have a range of investors across the spectrum, but for us, what was very important is no velvet ropes, right? We didn't want to take something that was for billionaires and make it available to millionaires. We wanted to take something that was available to now available to everybody. So remove all velvet ropes, essentially.
Okay. So here we're going to click on what? We'll hit explore to start.
Yep, explore, and then once you're in here, again, similar to the last one, you could work your way through.
Oh, I see the legal
comparable
documents.
transactions, right? The story, the investment thesis, the photos and videos, and then ultimately the timeline. This is every data point that we've collected on the history of this asset.
Great.
And then once this deal goes live, essentially what will happen is we run what's an initial offering, very much like an IPO. During that period of time, we raise money from our community, and those dollars go to actually acquire the asset on behalf of the investors in the deal.
Amazing.
Yep.
And so people can pay with a credit card or wire transfer?
Right now we do connect your bank account. It's super seamless, but we don't do credit cards just yet.
Yeah.
We're working on a gifting.
Is that because the SEC doesn't want people putting this on their credit cards? It sends a signal that it's not an investment. It's more like...
It's really not the SEC. It was more we didn't really want to make it where it just felt funny to have people, maybe taking, 20% interest to put their money,
in something that's not going to grow at 20%.
Yeah, it just didn't feel exactly moral. But there's other ways, like in our gifting flow, for example, if I wanted to gift you a share, that you'd be able to use a credit card for that type of opportunity.
What is your commitment? Let's say this is a $100,000 purchase. Of the $100,000 going in, how much would you be?
We would represent between 2 and 10% of every deal.
Wow.
Yeah.
And do you tell people what percent you are? And then do they read into that, oh, you're putting 10% into this, you believe in it more than the one you put 2% into?
We don't, and we tend to try and leave as much open for our community as possible. We just tried to leave that flexibility so that we could play a different role depending on the deal.
So if it didn't fill up, you could fill up the rest.
Exactly.
Now, are you buying these on contingency, where you have an agreement to buy it if you clear a market? What happens if you don't clear a market?
Exactly. And so in most cases, we're taking option agreements. So I don't really like the idea of consignment. I feel like it doesn't align incentives appropriately. So if we're going to take a deal with one of our suppliers, we'll usually put something down to make sure they know that we have skin in the game as well. In the event it didn't fill. We've yet to miss one. In terms of we're very deliberate about, running our deals in terms of their investability as well as their marketability on the platform. So we try to be really deliberate about when and how we bring things to market. But in the event one didn't fill, it would go back to the owner.
Now, what's the deal? What do you get out of this?
For us, well, one, we get the opportunity to put these investments together. We take a small piece of the deal, the liquidity from the seller. And compared to, like, for example, if they took
what does that mean? A percentage deal from the seller? Seller sells it for $100,000, you get 5%?
A little less, but yes, that's about right.
3%?
Something in that range, typically, yes. So, and comparatively to what that seller would pay to a dealer or an auction house, it's substantially more favorable.
What are the auction houses? When I watch that stuff on TV,
usually around 20%.
20%?
Yeah, and that's for cars. If you're in other asset classes, it could be upwards of 30%. So
it's like an App Store VIG.
Yeah.
It seems reasonable if they put together a giant auction and get all the buyers in the room.
Absolutely. There's no doubt about it. It's a lot of work. Yeah.
All you have to think about is, would I be able to sell this car for the same price, or would they get more than 20% for me?
In a different situation.
Correct.
Yeah.
So in most cases, I think the answer would be yes.
Depends on what you have.
So if the thing's really in demand, it would just fly off the shelves and you'd find a buyer immediately.
That's exactly right.
Yeah. So if you own a beautiful modern masterpiece of a house on the hottest street in town, you could just do for sale by owner.
Just like any other asset class.
Just like any other
That's
asset
right.
class.
Yes.
So how many people participate in the if you were to average the last 3 deals,
Yeah.
how many investors were there on average in each deal?
In some of our smaller deals, it's usually a few hundred investors, and some of our larger ones, it's upwards of 1,000.
1,000.
Yes.
And it cost you $20,000 to set up the legal work for this?
Oh, absolutely not. No, with the way we have it structured, it's more like you could think of it like a shelf registration. And
what does that mean, shelf registration?
Sort of like when when you take a company public and you want to put additional securities on that shelf. So we've got it set up very templatized, where each time we put a like kind thing on it, it amortizes the cost over a larger base of deals.
Got it.
Yes.
So you created like a series of
Exactly.
documents for these
Exactly.
kind of funds.
Yes, and they're not funds. They're actually all independent securities, and they're all independent from one another. So if, for example, one deal went bad for some reason, that would in no way impact any of the other deals.
Got it. If nobody wanted Lamborghinis anymore because
That's right.
there was some
They all have-
toxic reason that
They all have
asbestos
exactly
in them,
Yep.
whatever. Something crazy.
They all have their own securities. They all have their own EIN numbers. They all have their own cap table, depending on the deal.
And then you have to spend $500, $1,000 a year maintaining them. What does it cost to maintain them?
Under 1,000.
Okay,
Yeah.
so you got, if you hold this for 20-year period, you have $20,000 in kind of like admin costs, plus the $10,000 or $15,000 in wire costs and setup costs. So it's about $30,000 to hold it for 2 decades, or $20,000 for a decade.
If you held it for a decade, it would be less than 20,000. So we've got it down, down to hundreds.
The reason I bring this up is, I do a similar thing with
Of course you do.
syndicates.
Sure.
At Jason's Syndicate, formerly on AngelList. We moved off AngelList because, again, back to the VIG. Why give them? In their case, they asked for 25. We were getting 10.
Yep.
But why give them the VIG? It makes no sense. And so you have to buy an asset that is, in order for it to be, you want it to be less than 10% costs.
Yes, absolutely.
Or else you have to spend the first year or two recouping. Yeah.
Yes. And we're not spending anywhere near 10% cost to get these set up.
What is the vision for how long you hold these? Because
Well,
that's the other thing I don't understand. Do you just hold it forever and have people trade in and out of it?
It depends on the asset. And what's really good about this is we don't want to publish a distinct holding period, right? So in these types of illiquid assets, there's signaling risk in the sense of if you want to buy something, the price goes up. If you want to sell something, the price goes down. And a lot of that gets lost in terms of, you lose a lot of your sort of upside in that signaling. So for us, everything's always for sale. And so we're always fielding inbound offers to actually, we call them like takeover offers, to take the asset back private, right?
Got it.
Yes. And so we're getting inbound offers on a daily basis for all of the assets on the app.
So you have one of Jerry Seinfeld's former cars on there.
We do.
If somebody came on board to buy Jerry Seinfeld's former, what is it, a Porsche?
Yes, 89 Porsche Speedster.
Yeah. So if somebody wanted to buy his Porsche Speedster and I had bought shares in it,
Yes.
and somebody offers 150% than when I bought it, am I forced to sell? Is it dragged along with the group? Who
Yes.
makes the decision?
So the decision is ultimately made by our advisory board of experts. We tried to keep it as democratic as possible, and they make the decision on our behalf. We couldn't run it as a true vote because, again, the costs of actually running that vote for what is essentially a public company would outstrip the value of the actual deal. So what we do instead is poll the user base and then leverage data, right? We've got this secondary market where transactions are happening, which show relative supply and demand and the sort of sentiment of the investment community over a period of time. So that indication plus polling the actual audience of investors, the syndicate, allows us to get a good temperature for whether or not it's a good time to sell or not.